Hello, good morning, Mitch. Just just got up and about to record. Just started recording your class, brother. I've been going to the gym lately, so feel really exhausted, after everything. So, um, we're supposed to talk about the basic classes and the things to look out before you analyze the charts. So that's where your major focus and concern has really been on. So I just want to put you through it straight up. So first of all, you always when you open your chart, it's just a whole bunch of candlesticks, a whole bunch of candlesticks you're going to meet on your chart, and then sometimes a lot of people be like, okay, well, what do I do next? So things you need to consider is before you analyze your chart, there's something called a top-down analysis. No, why is it called a top-down analysis? Is your ability to look in depth. You want to look from higher time frames to lower time frames. Now the truth about it is each of these time frames have specific needs and reasons why you should look at them. You know, everybody has a trading style and a trading pattern they use. So I'm going to be teaching you how to analyze the chart the way I analyze the chart. Someone else might teach you, and still teach you how they analyze the chart their own self. So let's start off by saying I analyze my charts my daily, from my daily time frame, from my daily time frame to the 4 hours, to the 2 hours, the 1 hour, the 15 minutes, and sometimes the 45 minutes as well. Now, how do I do this? So, the daily shows me the overall strength of that pair. You know, the 4 hours gives me trend. The 1 hour is my trend confirmation. My 45 minutes and my 15 minutes, 30 minutes are my entries. And that's because I like to trade long. I don't go into the market looking for just 10, 20 pips. I like to go into the market, aiming to get at least 50, 60, 70, 80 pips from the market. So I need to use higher time frames to scale the market. So this is a chart of EuroCAD on the 1 day. So let's just reset this a bit. Okay, so now looking at this chart, it might look funny. You're kind of wondering, okay, what's happening at this point? You can't seem to find that perfect trend you've been seeing in all your PDFs and all your books, and I'll tell you why. Your ability to be able to pinpoint things happening in the market is what gives you an edge over your charts. So now take for instance, if you do not understand these candlesticks here, you really might not be able to do so much, because I could see a whole lot of candlesticks that are showing me clear indications, of what I want to see. Another thing is using your tools, your drawing tools to find places in the market. Now, my style of trading is support, resistance, demands and supply, key levels, psychological levels, and sometimes chart patterns when I could clearly see the chart patterns. And then most importantly for me is market structure. So I'll give you an instance. If I was to start analyzing these charts right now, the first thing I want to look out for are key levels. So I'll start off by drawing my key levels out, because here is too backdated. I want to come to the present a bit. So I would start to draw my key levels from my present. Okay, so now I have my key levels in place, and then you can see how prices reacted on each key level. You have prices around this level here, price around this level, price broke, came back to retest this same level, the price coming back to the same level again. So that's how I draw my key levels. Now, one thing about my own key levels are this: I just don't draw them as lines. I draw them as zones. I draw them out as zones. Okay, so now I have clear downward structure. I could see prices making lower highs all through. So now I've identified structure here using my key levels as well, drawing out my resistance lines, my support and resistance lines. But basically, your resistance will always be your support, and your support will always be your resistance. Just simple law of support and resistance. So I just had to draw out the key levels, and then I can see clear market structure. Now, what else am I looking out for here now? I'm looking out for momentum push. I'm looking out for every time that I could find momentum. For instance, here now, I've seen this setup, this candlestick setup, and the momentum candle. There's no way I'll be looking to see if I would want to buy in this region. I'll be looking more for sells rather than for buys at this point in time. If at all I'm going to be looking out for buys, it's going to be a retest to this level here, to keep structure. So I might be expecting something like this. I'm still expecting this market to drop a bit, and then I'll be expecting something like this to maintain structure. Because you see every time prices break a level, it goes retest the level, falls back down, pulls back down, break, retest, like that. So that would be what I'll be looking out for to happen here. So I'm still expecting a further push down. Another thing is I could create a level where I feel prices would possibly get to, you know, and then I feel prices could possibly get to this level here before this movement back. And why is that? Why do I think prices will get here first? It's because I've seen prices do the same thing here. I've seen prices do the same thing. For every time prices came to a new price level, which is you can see from 58 to 57 to 56, sorry, to 1.58, 1.57, 1.56, 1.54 here, 1.52 here, 1.53 here as well. Prices always found its way to go back up. So I'll be expecting prices here with price at 1.52. When I see prices come back down to this 1.51 here, region here, I possibly might be looking to go long at that point in time, to want to retest this level before coming back down. Now we've identified momentum. There's a momentum bar here now. You can see how it broke through this support level, this key level here, very, 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 very strongly, a full candle. Normally, normally you'd always want to find prices, breaking through key levels or support and resistance levels strongly, and we have that ready. So we have a continuation of momentum here. So we've identified that this today is already showing us strong sales. Today is already showing us strong sales. Then now you go to your 4 hours. Now you want to identify what's happening. How does the trend look like on the 4 hours? So we already have structure still in place on the 4 hours. We can see clear structure still in place. 4 hours. Yeah. So now most times a lot of beginner traders would always want to try and draw trend lines and everything. But what I want to be teaching you as well is your trend lines would always give you the perfect the perfect kind of trend you want. So what you're doing is, if at all you're drawing your trend line, there's what I say a myth of you always have to connect every possible high with your trend line. Now most times you won't be able to connect every possible high with your trend line. You have to look for the most significant highs at equal proportion is what you connect. You can't take your trend line and start doing this now like this, and you say you're connecting all possible high. No, try to get highs at equal proportion with your trend line. That's a safe way to draw your trend lines. Secondly, why I don't use trend lines is I already have an idea and knowledge about the advanced market structure. The advanced market structure is you're looking for prices to always give you this this um this perfect market move here, where prices come back down to every previous high to touch it exactly at that point. The way it's being portrayed on our PDFs. But to be honest, there are times where you won't get this perfect you get this perfect trend you're looking for. There are times where prices could actually not just obey the trend. It could come lower of this sort like this, you know, and all that. Now, the truth about it is what you need to remember is the fundamental of what market structure is. As long as higher lows are being created and higher highs are being created, you are directly in a bullish trend. So your ability to spot out that there are higher lows being created and higher highs being created is what gives you an edge. So you don't always have to use a trend line to try to find the direction of the market. You just need to remember the fundamental of structure. So that's exactly what we have here. That's exactly what we've been having at this point here from our daily. We had a higher high here, we had a low, and then we had a high that could not break. So there was no higher high at this point in time. Rather, we had a lower high. So automatically, this point here showed us a reversal in trend, because normal what you're supposed to have is higher highs, higher lows. This was a low, this was a higher low, but a higher low without a higher high automatically became a trend changer for us. So here is a trend breaker. I call it a trend breaker. After this, you now started having lower highs, lower lows, created a new lower high at this level here, dropped down, created a new low, maintained structure here, couldn't break above this previous high. Structure was still being maintained at this point in time. Then came back down all the way here again, created a new lower low, and boom, created a new um lower high at this point in time, and now it's going to create a new lower low. So that's the same thing. So on 4 hours, it's clearer to see it on 4 hours, because you know market structure and trends are usually clear on 4 hours due to the ability of holding up more candlesticks than the daily. So here you have a high at this point, you have a low, you have a high, you have a low. So most times what I do with my own lows and how I clearly see my market structure is when I use key levels. From one level to another level is a new low. You understand? From one level to another level creates a low. If it breaks down and retest that broken level, that creates a new high. So exactly what happened here. From this high here, came down, break, and went to a new level. So the level in between it creates the new high. You feel me? The level in between it creates the new high. So now you have one high, a new high at this point in time. So now we're also waiting to see how prices are going to react when it gets to this level. If prices get to this level and creates a new low, then it's going to definitely create a new high. So that way you already have, market structure in place. So what another thing you need to keep in mind is we don't want to find prices breaking previous highs, because that will be a break in structure. So we want to make sure that each high closes below previous high. Each high has to close below previous high. So right now, if we find prices creating a new high at this point here, we have prices creating a new high at this point here, for the main fact that it hasn't been able to break, successfully above this high and close on top of it or on top of this high, then we still have market structure in place. So we'll still be looking for more downward movements. So now we've been able to identify the trend. So we now see that it's a downtrend. So now how do we get our entries? Now we've already identified and said that when prices get to levels here, we'll be looking to see how prices react at that point in time. You understand? Now, there are two ways to want to take an entry on this trade presently. It's either you wait for prices to get to this level, either the 151 or the 1500 successfully, to create a retest at this point, to create a new high, and then you take your trade, or you go to your 1 hour now, since you've identified strong momentum on the daily for a sell. Now you go to your 1 hour. Sometimes I like to look at my 2 hours. Okay, 1 hour already signaled a re-entry for us. We have like a minor pullback here, and we have price action. We have price action here at this level here. See, even on the 1 hour, you still find smaller time frame structures. How do I mean by smaller time frame structures? Here, you have a high here that wasn't broken. You have another high here that wasn't broken. You have another high at this level too that wasn't broken. You have another high here that wasn't broken, and then it created another high here that wasn't broken. So if we had found this on time earlier on, we would have made our entry somewhere around here. And then, have our stop loss just slightly above this box here. And then mid entry. So now, if we still want to make entry on this pair, we would be looking out for the next place where a pullback could happen and where structure could still be maintained. So apparently here we have a low at this point here. And remember, lows would always become, your support when broken would become resistance. So we've been able to identify this support here level. So now I'll be expecting prices to break down a bit, come back here to retest this level. So let's look at the 30 minutes time frame and see. Okay, so we have we have prices breaking this level, and we have some sort of price action again at this level here. You have an inverted hammer here, which is trying to signify, a bullish candle will continue to this level. So if this candle pushes back into this level, pushes back into the support level that we just drew here, then we'll be expecting prices to go into this level and reject. So we'll find a rejection here at this level, prices being unable to break this level again, then we'll have a possible entry at this point here again. And then this time around with a better risk to reward. So you could place your stop loss here above this level here. That would be like 7-8 pips. Let's say 10 pips at most. And then you make your entry here, and then you could continue the ride. You could continue the ride to the supposed level where we said price we're going to get. That's 151, and that would be about 45 pips. So this is how to analyze your charts. You have to be able to combine everything you know, everything you've learned, and most importantly, while trading, for me, I use market structure a lot, breaks and retest. Whenever I see levels, I always expect them to break and be retested before I want to take that trade. So basically, you have to use your daily for momentum gauge, like how did the daily candle open, how did the previous candle close, and what exactly is it focused on. Am I looking out for a buy? You have to look for price action on that daily also. If you find price action on your daily is very strong, so if you find a trend on your 4 hours, as long as the price action on your daily is showing you maybe a morning star, you have to obey that morning star, because it's definitely going to want to buy. If it's showing you an evening star, it wants to sell. If you're finding a hammer or a shooting star on your daily at a key price level, is also very, very important. You have to obey it. You have to make sure you look at it critically before you take a trade. You don't want to play against the trend or against the momentum of the market. Presently, as you can see, there's a live chart. You could see this candle moving up towards that direction again. So we might possibly see rejections around this area, and then prices start to fall back down. So that's basically how to analyze your charts and how I analyze my charts. So if you should go back to the 4 hours chart now with me, you see either ways I'm still safe, looking out for prices to come back here to that level, to this level, and then prices should come all the way down here. So but on a larger time frame, I'll be expecting prices to do something of this nature. Either prices retraces from here after it gets to this point, and then falls within my reach here, or prices could get to this point, prices could keep falling, or prices could keep falling, all the way here, which I highly doubt, but this is my best pick. Prices to get to this level, create a new significant high here to maintain structure before falling to this level, if at all. So another thing I would possibly want to do is look at the daily and try to make sure there's no demand zone at that point. So I could find a demand zone here. 1, 2, 3. So here is significant for me. I know prices will definitely want to come back here. From history, prices has always been to this point. So there's a high chance prices will want to come here this time around before going back up. So here 151 stands for me. Now, how do I set my take profit and my stop loss? Remember, we've identified that level is significant. That level is significant to me. We identified that this level is significant to me. So I possibly set my stop loss somewhere above the level a bit, because I would not want to have prices not touching that level. So I might set my stop loss somewhere around here. So when prices come, prices is just going to clinch my stop loss and then, do whatever I want to do. But as long as that happens, I'm in profit. Another thing you want to do is whenever you're in profit, you want to break even. Move your stop loss to your entry at break even. So that way you're trading risk free. Whatever happens, you don't lose money. That's another possible thing that you could do. The only reason we break even is you have to make sure you're breaking even after price has created a new structure and still going your direction, so that you don't break even when you're still in the previous structure entered and then prices reverses on you and then starts going back your way. That's another thing you always want to consider as well. So for me, this is how I analyze my charts, and that it's what works for me, and that's what I'm teaching you. So sometimes I like to use the indicator. I like to use the stochastic indicator just for trend confirmation and momentum. When I see my stochastic cross above the overbought level, and they're all spun out, I know that, oh, there is there is um there is a down there's a downtrend at that point in time. So what I do is I only obey the stochastic when I find it around key levels, support or resistance, or demand and supply. As you can see here, prices were at this level here, and then it crossed at this level, and then you could see the downpour to the next level where it became oversold again. And at this oversold level, it crossed at this point, and you see a buy. At this point in time again, it crossed here. See, on a level here. Let's just draw this out here. So you can see level was recognized, and then it crossed, and then it went down as well. So that's how to use the stochastic. Actually, it's nothing that hard of a deal. So this is it. So if you have questions whatsoever, just call me or DM me for more clarifications again. So have yourself a nice day, and keep an eye on this same analysis we just made, and then and see how it works, how it plays out.